The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out the day like we usually do, taking a look at the German DAX. As you can see, we had a little bit of a reversal following the U.S. election, with the rest of the world, following step by step from what we were doing. So you can see here that the DAX has, gained back everything that it lost, plus a whole bunch of stuff, since that time. What we're going to try to do this morning is to look at the markets, see where the money's going here. That's the best way to do it. If you remember Bernstein and Woodward, when they were doing the expose on the Watergate, they were talking about follow the money. And in fact, if you do that, you have a pretty good idea where things are going. The first thing we want to take a look at is, if you remember, when the election process started with Mr. Trump being the nominee, Goldman Sachs came out and said they prohibited any of their employees from giving money to the Trump campaign. I don't know how they can do something like that, but they came out and said it. So I guess if you work for someone, they can control that. But let's take a look here at what's going on here in the banking index. As you can see, we have the three drive pattern form back here in late October. We backed off for 6 days and we rallied. And then, of course, when the election came out, the election news came out, one thing that Trump does not like is government regulation. And so one of the things they were saying that the Dodd-Frank bill, which is a horrible bill anyway, will probably be repealed. And hopefully they'll replace it with something like the Glass-Steagall Act. Bill Clinton, he repealed the Glass-Steagall Act 20-some years ago, and that's what sent these markets crazy, because it allowed investment bankers to go into, in other words, conventional bankers were unable to go into investment banking, and they were able to take very big risk. And what happened when they have risk too much? The government comes in and bails them out. That's not the way it's supposed to happen, but that's what happened with Bernanke and his quantitative easing and the too big to fail. And if you remember, Henry Paulson, the former CEO of Goldman Sachs, was now Secretary of the Treasurer. And if you remember, before him, it was Robert Rubin. So Goldman Sachs has their finger in a lot of these things. So you keep in mind that they're usually protecting their backside, when we do this. So these are things, that you've got to try to, realize that when these things are going on, that you have to be able to, see certain things happening. But that's the main thing, that we really have to really watch. Now the euro has started to break down. We're below 109 this morning. We've posted those charts yesterday quite a bit. I'll try to do it again this morning too. But we are really looking at a euro that really wants to break down. If we get above the 99.50 level in the U.S. dollar index, then you're going to be looking at something, pretty ominous to the euro, because it's the exact opposite of that. So it still has a very bearish bias. Let's get back to where many of these things originate, because you're talking about money. Let's take a look here at the long-term Treasury note chart over the last several years here. As you can see here, we've broken down badly. Now, what's happening here, folks, is the supposedly the news is that China is dumping our Treasury bonds. And if you realize that they buy 1/3 of all of our Treasury bonds, that's what's pushing them down so much. You'll notice that 78% retracement that we hit just about 9 days ago at the 129 level. We had that little bit of a bounce after the election. It got up to 130, and then it's totally collapsed. Now we're getting down to some pretty strong support here near the 127 level in the notes, and we're very, very oversold. As you can see, we've equaled the down move from January through June. We've just equaled that this morning, and we are setting right at a 61% retracement of the low in May. So the whole world is getting bearish, Treasury notes and Treasury bonds now, which means there's probably a nice counter trend rally coming in here, but you have to be extremely careful because of these wide-ranging bars we've had the last 2 days. These are outlier events. You don't see these, very, very often. So it looks like Miss Yellen is going to be in trouble. I noticed on Bloomberg this morning they were saying that she would not finish out her term, which ends in 2018. And I don't think there's any more fitting way for her to go out but to raise rates 1, 2, or 3 times, because the market has already raised the rates, folks. I know Treasury bonds. The support in the Treasury bonds, Mr. P, comes in around the 155 area. We're about a point away. But 155 was a really key area a long time ago. But the notes, which are the much bigger market, are easier to see, and that's down just a little bit. But it's, I nibbled at the bonds yesterday and got spanked just a little bit. But, I knew I wasn't going to stay in front of it, because if it broke that 168 level, that it was really heading, to the downside. So this is the longer-term picture. We've been telling you that rates have been going higher, and they have. So when the Fed does it, they're supposed to be leading the market, but they never do. If you go back and look at the history of the Fed and look historically what to do, in October of 07, before the biggest bear market we had since 2000, Bernanke said all systems were go, everything looked great. That was October. It topped on October the 7th. So just like everything else, you have to take the responsibility for it and trade what you see, not what you think, because your thinking can, be wrong, but your looking should be correct. I mean, you've got to watch this stuff because it's very, very, and believe me, sometimes it can be really frustrating. I mean, I was very frustrated on election night because I happened to be short, and it was working absolutely great. I had orders in to cover, and by the time it opened, it was at break even. It had rallied back to the end of the day. So I made a very, very small amount where I should have made about 10%. I made a very, very small amount. So, that's neither here. Excuse me. That's neither here nor there. So we'll see it. One thing I want to mention to you here, folks. I'm really a believer in history, and especially history of the market. And one of my favorite authors was Bernard Baruch, and he said the greatest scam in all of Wall Street was to inflate prices to a high price, and you'll get suckers to buy it all the way down. So remember, this will happen in 1980 when Reagan was elected. The market went up and made a high in 1981, in January of 81, a year later. Then it went down for a year and a half, bottoming in August of 82, and that's when the really bull market started. That's when we had a Federal Reserve that was not interfering with our money supply like they are now. So that's going to end. Whenever Yellen gets out, that's going to end. What happens with quantitative easing is what's going to be interesting to look at, because you see that the United States Treasury, i.e. through the Federal Reserve, is long all of these bonds because they bought the bonds and they put the money into the money supply, supposedly to help the banks, and the banks didn't help anybody but themselves. So 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. I posted the chart of Goldman Sachs in here. You can see here that we left this huge gap yesterday, and now it's heading up to the 78% level, which is up a few more points from here. We've got a caller from one of my favorite cities, Birmingham, Alabama. Jerry, are you there?
Yeah, I'm here. I'm looking for corn, and I heard, how can the dollar be going up and the stock market be going up? That seems like an outlier event for over the weekend.
You and the rest of the world think the same, Jerry, because we live in interesting times, of course. So I was surprised also.
Do you think the plunge protection team is in there big time, and then one day they're just going to go out to lunch and just let the whole market correct?
Well, I think the plunge protection team has been offset by the quantitative easing of the Federal Reserve. We've seen Shane Smolian from wolftrader.net come on and prove to us without a shadow of a doubt how the Fed is, pumping money into the stock market to keep, prices artificially held. We had a big crash, on the Tuesday during the election, but there was virtually nobody.
800 points, 350 times 2 or something. You had 777 in 2008. We hit that. We hit that number overnight.
We sure did.
So now we should take 1,600 points maybe. No?
Well, I think 1,600 is probably good because, we dropped 500 and some points in 1987, and that's when the Dow was trading at 2,700, and we're 5 times bigger than that now. So it could easily do that without any trouble at all. But I don't think the plunge protection team is, they're probably there, but, we really don't know. But the Federal Reserve is really the one that has been doing this with this quantitative easing, keeping interest rates so artificially low. But, we've been saying, look what's happened to notes here and bonds. I mean, they've been going down for well over a year, and now they've raised 30-year mortgage rates. I understand today had their biggest move in like 6 or 7 years. So, rates have skyrocketed. That's not going to help someone buying a house, but, the rates are still extremely very, very low. So that shouldn't have any effect on it at all.
If you have a good paying job,
That's the key.
Your taxes. What about corn? Where's corn going? We're almost back to 337.
Yep, I want to be watch. Fact is, let me post this in here and take a look at it because we had a corn report just yesterday.
Is that what came out? Oh, okay.
Yes. That's what caused it. Yeah, and in fact, it was there were two reports. There was the USDA report on Wednesday, and then Wednesday night there was a report about palm oil, which comes out of Malaysia and India, and that was construed as being bullish. So soybeans gapped up about 25 cents, and they gave about half of that back already. But the area to watch on the corn here, if you'll look, we have a really nice area to look at, and that's at 335, 334, 335.
That's when the first crop report came out, like in April, it was 335.
Yes, that's correct. Yes, and that's where I'm looking. And corn responds really well to the lunar cycles. If you just, if you don't believe it, just go back and mark your charts up and see when there's new moons and full moons. And we're coming into a full moon here. So this is going to be really interesting to see if we get a buying pattern. We're down. We still need it to get about 10 cents lower. But if, in fact, if it only gets down to like 339, it can still be a good buy. So I'm watching it, by the hour, because I really would like to take a look to buy the corn. Around 335 would be my favorite spot to watch it. And anything below 323 would be no good.
I've been following this guy Trader Mo, and he says, and I agree with him, gold will crash to $700, $800. It's doing a V shape. And I think we're on the way to 700. Maybe check out his website and tell me what you think. Trader Mo.
Trader
M-O-E.
Mo, like M-O-E or just M-O?
Yeah, he's a pretty smart guy. We're doing a V shape. It's called a VWAP mode, and we will hit 700. Maybe we're going to go on the gold standard. Trump will bring us on the gold standard. Didn't Kennedy try doing that, and he got assassinated?
Well, Kennedy, what he was going to do, he was going to take the U.S. Treasury was going to take over the money supply from the Federal Reserve. That's what he tried to do. They had actually had a $5 bill printed that said United States Treasury will redeem these for it wasn't a gold certificate, but it was redeemable by the U.S. Treasury and not a Federal Reserve note. Now that's a lot of conspiracy stuff, but no one really knows if that was the reason or not. But money controls everything, so my guess is that it was probably something like that. One thing I do know, Jerry. Yeah, I do know, Jerry. Lee Harvey Oswald did not shoot the president. I believe that 100%. So whether that means anything or not, I don't know. But
he was going to go to the gold standard and get rid of the Federal Reserve, and the Federal Reserve will do the same thing to Trump once he gets rid of them. The Federal Reserve will probably try taking him out. And I'm with Arch Crawford. I'm stocking up on food. Gold at 700. Check the chart out. It can't go from 200 during 9/11 up to 1800. It's going to go back down to 600. In the Bible, you're supposed to be able to buy 30 loaves of bread with it. So,
okay, well that's good.
If a loaf of bread is $2, here it's 600.
Well, what I'll do is I will try to get Trader Mo on. I'll go to his website, try to contact. Is he in the United States?
Yeah. He's a smart guy. He has really good charts. Trader
okay.
Mo.
I will go and if you have his phone number, if you'd email me, I'd appreciate it. Just larrypesavento@gmail.com.
Oh,
and
okay.
I would like to get his. I'll give him a call, and we'll see if he'll.
I'll send it to you later.
The $64 question is whether he'll do it for the minimal $25,000 speaker fee that they offer here at TFNN. And I'm just joking, Tom. You can sit down now. Anyway, thanks for calling in, Jerry. Really appreciate it. And I love Birmingham.
Okay, thank you.
You bet. Thank you very much. Anyway, I went down to Birmingham when Michael Jordan was playing ball for the Birmingham Barons. He was trying to be a baseball player. After seeing him for 2 innings, I realized that his only chance was to come back and get him on the back into basketball, which was certainly the thing to do. Okay, let's get back to these markets here. But corn does look really interesting at that 335 level without any trouble at all. Let's switch over here to the VIX index. We've got just a minute or two. This is the part of the frustration that I was looking at. I was looking for this volatility to have a big change. As you recall, We were looking at that Brexit move that went from June into the June 27th, and it was a big surprise there. We were looking for the big surprise to happen here. We certainly did get it, and the VIX has gone from 23 down to 14 in a matter of 5 trading days. So we're going to get it down near bottom here pretty soon. But these are the things that I was looking at from a technical basis. Unfortunately, because of the markets overnight when all this occurred, you just didn't have access to it sometime unless you had a futures account where you had overnight trading, which some people do and some people don't. But in general, most people are not up in the middle of the night looking at this stuff. And believe me, everybody that I knew that was trading did not go to bed that night because there was just too much happening, and you wanted to not miss anything, and it was difficult. But by the time you wake up in the morning, the party was already over. We were down 830 points in the Dow, which was limit down, and we ended up 200 and some, 300 and some. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to switch over and talk about copper here a little bit. As you can see, we've been following copper, but we don't trade it very often. But we were watching what John Logan was talking about when the copper was at that 225 level. But also we have a very astute copper trader in the room at TFNN, Mr. Z. And John said that, you know, if we got above 225, it could really go, and it certainly did. The key here is if you look at that 1.618 expansion of the AB leg, that was when copper was 235. Folks, once something goes beyond 1.618, which is the end of the Fibonacci spiral, you know, holy cow, you know, you're looking at something really, it sounds like Harry Carey. Anyway, you can see where we are now. We went all the way up to 360 a pound. Now, that is a really big number up here, 360. What I'd like to do is to go back and show you we've had Rich Anderson on our line quite a few times. We'll have him on next week, hopefully. But you'll see here that copper has now made a 61% retracement of the high we made in 2015 when we hit $3 a pound. Excuse me, I said 360 a pound. I meant 260 a pound was the high. And it also, if it closes a little bit lower today in copper, it's going to leave a shooting star pattern. So you'll watch that. The important part of this is what I want to show you. If you'll notice the blue line, that is the S&P 500. And you'll notice from 2009 to 2010, it followed pretty nicely. But look what's happened over the last 5 years. It used to be called Dr. Copper. In other words, whatever copper did, that's what the economy did. And basically, that's what our economy has been doing. It's been following copper. The problem is the stock market has not been following the economy, and that's because of quantitative easing. These markets have been held up artificially by quantitative easing, and that's the key. Just a minute. There's a frog in my throat. I've got to get him out of here. Hold on one second. So we want to watch copper for a potential turn here, but you know we've had a big move out of here. We've just been informed by someone in the den that the Dow is having its biggest week in 5 years. And believe me, and you talk about respect for something, you really have to. Let's just look at the New York Stock Exchange Index here, folks, because we hit that 61% retracement last Friday, and then we had this huge gap up. You'll see the Tuesday day, you don't really get to see it because it doesn't show that the market went down and touched that low again, and actually went a lot lower. It probably went down to the 78% level had they been open, because the Dow was down 800 and some points. You can imagine, you know, that would have been 5%. Yes, you would have made the 78% retracement on the New York Stock Exchange Index, but it's not open overnight. It's only the Dow E-mini that's open. Even the Dow Jones isn't open. So you don't see that gap in the Dow Jones, and that's the big difference. But that's the really key level. The one thing I know for sure, folks, circle that level that we made here in early November, here on November the 3rd, on the New York Stock Exchange Index, because if we go below that, then you've got big problems. We're at the 61% retracement of the move that we had just a few days. We're going to be a little bit higher this morning. It looks like we're trading up about, looks like about 5 or 6 points here in the stock market, about 4 points. So it's nothing, you know, really dramatic happening so far, but we'll keep a close eye on that. Now, gold and silver, folks, let's just get to this because it's very, very important here in the gold market. If you'll give me 1 second, I want to bring this up because it's really got a very good spot here to look at this. We talked about this yesterday, but it's worth repeating because it's got so many things that are there, including the we're trading around 1274 right now. Once we get below 1270 level, that's going to send us, I believe, heading towards the area of around 1160. Now, I heard the gentleman from Birmingham about $700 gold. Folks, I don't think in those terms because the amount of money that you have to risk to see if gold goes to 700 is just beyond my fathomable small brain. So I wouldn't worry about that. The key to this chart is the fact that we had this really nice cycle highs. You'll see them marked to 1 and 3 and 5. They came in at perfect Fibonacci ratios, as you can see, within $1. It gave it up immediately. I mean, it just went straight up and straight down on Tuesday evening during the election. Gold went up 60 and down 60 and has continued to go lower. So that's not a bullish sign. If it was really good, it would be trading at 1345 to 1375 right now, and that's not happening. So that's not a good sign for gold and silver. That they're not really a flight to quality here. We'll watch that, but and if we get below the 1246 level, we're only $25 away from it right now. $30 away. You're looking at the next ABCD move that takes you to 1162. So, and that takes out the lows from May, and that would be a 50% retracement of the whole move that we started way back in December. So, below the 1265 level tells us we're probably going to 1162. Now, do you short it there on the breakout? I certainly don't want to take that risk, but I'll look for a very low risk shorting opportunity once we break below 1265. In the gold, then I'll take a look at it from the short side. The only way you could have possibly been ready to sell that is if you'd have done the work beforehand, which I did not do. I didn't think that gold had a chance to run up to 1335, because of an election, but it did, and that's I get surprised a lot. But in retrospect, I have to go back and look to see what really happened, and that tells you what's happened. And since that time, you certainly can't be bullish. You have to be bearish to gold, at least at the present time. So watch this very, very closely, and we'll see what's really happening. But that 1162 is going to be really interesting. That is going to be a very, very interesting spot in the gold. There's no question about it. I've had 2 tweets here, not tweets, because I don't do any social networking. I don't believe in that stuff. But several people have dropped me private messages here from the den, asking about, do I think notes are going to bottom, notes and bonds? Yeah, I think they're going to bottom in here, but the interest rates are going higher. When the Federal Reserve announces it, whatever it is, it's not going to be like, a Brexit type thing, but the market will do the exact opposite because people think that rates are going to go higher, and they've been going higher for 3.5 months, folks. From 177 to 155 is not an easy task. That's 22 handles. In that I've been bearish bonds up until yesterday. I took a little nibble at them, but that's been a pretty big move, and but that should be over here. But we'll see if it's going to change. But like I mentioned, that it'll probably be either 1 or 2 day correction, and then we usually be 3 to 5 day correction, because we've been straight down here for so long that we're extremely oversold, and we don't have to worry about that. What's interesting here, we got to take a break. 877-927-6648. Oh man.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender. It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we have Mark from Concord, New Hampshire. Mark, are you there?
I am here, but it's Concord, Mass., not Concord, New Hampshire.
Ah, sorry about that.
Yeah,
Anyway.
about 40 miles south.
Okay.
Larry, I had a question on something that Arch Crawford said yesterday. He talked about a crash. Now, did he reference? He referenced two things. And I know he was not on very long, but he referenced the crash that came overnight, obviously from the election results. But then he talked about a second date also, and I was wondering if when he talked about a crash, was he referencing that crash, or is there a bigger crash yet to come?
He was referencing a bigger crash yet to come, and his time frame that he was looking at, based on his newsletter, was between the 14th and the 18th of November.
So that's within the next week or two?
Yes.
Okay. I was just wondering because I listened to that. I went back into the TFNN archive, and I listened to that for about 3 or 4 times, and I couldn't figure out if he was referencing that there's something yet to come, or if that was the crash. Okay, well, thank you for clarifying that.
Stay with me 1 second, Mark. If you'd like to know, all you have to do is to go to CrawfordPerspectives.com, and then you can just give Arch a call or ask him for his newsletter. He'll send you a copy, and that'll clarify everything for you. But as I recall, that's what he was looking at.
All right, great, Larry. Thank you. I love your show. Of course, I love Tom. I've been listening to Tom since he started his show up here in Boston area. So I'm a long-time listener both to you and Tom and Tommy and the whole crew. So keep up the good work, my friend.
Thank you very much, and you're absolutely right. Tom is the king of the hill. He does a great job for everybody, and we certainly appreciate everything he does for us.
Yep. Okay. Again, Larry, thanks. You have a great day and a profitable day trading.
Thank you very much. Thank you,
Bye.
Mark. I'll talk to you later. Okay, I keep forgetting that there's more than one Concord up there. That's like how many Parises we have in the United States. I think there's 11 different cities that are named Paris, so we'll see what happens. You know, what's interesting about our president coming in, there's a couple things. First of all, he's the first president he's going to be the oldest at age 70. And the other thing is he's the first president that moving into the White House is going to be a step down for him from Trump. Tower. So that'll be interesting. Frankly, a man that puts his own money into being elected and has a great family like he does, he can't be all bad. There's got to be something right about that guy. I know Clinton News Network doesn't think so, but there's got to be something. There's got to be something right about that guy, because you just can't build an organization like that to see what's. We happen to know someone that Trump was at his wedding, Todd Gordon, and Todd thinks the world of the guy, and he's just a friendly guy from what everybody that I've met 2 people that have met him, and they think he's a pretty nice guy. We'll see what happens. Like we're going to survive no matter what happens. That's the key. Okay, I posted the chart of that New York Stock Exchange Index in there. Let's quickly take a look at what's happening over in Japan. You'll notice here that we had this big sell-off in Japan. This is the Nikkei futures. We went from 17. We dropped about a little over 1,000 points. We got some of that back last night. We're slightly a little bit lower than that right now. So we've had a little bit of a rally, back from that area. So we want to watch it. Now, if we take a look at let's quickly take a look at the Hang Seng. And the Hang Seng, it can really be crazy because they take trading breaks, if you can believe that. Trading breaks in the middle of the day. They close it for a half hour for lunch or tea, whatever they do, and then they reopen it, usually with a gap of about 200 points, which is not the way to trade it. But as you can see, that was the overnight crash that we had here on November the 8th, and we had the big run up here where we got a lot of this back in the Hang Seng because of the huge gap up. But that's the problem with that, is it has some tremendous gaps. And that's what we're watching. I have several questions that people have asked me. Do I think we're going to be starting a new bull leg in the stock market, folks? I don't think that's going to happen, mainly because of the long-term charts. They're looking very similar, like they looked in 2000, where we made a slightly higher high. The same thing happened in October of 2007. We're making a slightly higher high now in the Dow Jones today. It is going to be a new high ground. We were within 40 or 50 points of it yesterday, and I believe the Dow is up 70 or 80. It's even more than that. It's up over 100 right now. So it's going to definitely be in new high ground, which means the S&P should challenge the 2194 level. We'll see how this works, but we'll watch it how it turns out. The key markets to what gold is just breaking now, folks. We just broke below the 1264 level, so that tells us that gold doesn't look very good. To me, it looks like we're dropping $100. And believe me, that's not very far away, because we went from 1335 to where we are now. We've dropped $70 in 30 hours. So it's going down $2 every hour. So $1 every hour. Yeah, that's right. Anyway, we'll see if this thing is going to hit that level, but right now it does not look very good. That's the key to watch. The euro is weakening here. We're trading well below 109 now. The next level on this to look at is 107.50. The dollar index is breaking out above the 99 level. That's another very positive sign. And we've talked about that dollar index before, and it certainly looks like it wants to move higher from these levels. So we'll watch this, what's going on right now. Hold on here 1 second. I have a Okay, we're back, folks. I'm sorry about that. Bill Meridian called in, and he was listening to the show. 10-4, copy that. Anybody hear me? Okay. Anyway, he's going to get back to me, and I'll have some more information tomorrow about these key dates that Arch was talking about. Arch and Bill are very good friends. They worked together in New York back in the late 60s together, so they've been friends for many, many years also. So we'll have him on. In fact, I'll try to have Bill on tomorrow if he's not busy, because he does a great job, and he's certainly done some well. You know, folks, we have to take our hats off to the 4 astrologers that said it was going to be a Trump, blowout. They spotted it right on a year before it ever happened. You're talking about Arch Crawford, Bill Meridian, Shane Smillian, and Norm Winsky. All of them said that's what was going to happen, and that was just based on the charts of what Hillary was going to be looking at. So anyway, 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're going to try to have Bill Meridian on the show tomorrow. I'll be talking to him in about 10 minutes to see if we can get him on to see what's happening. Remember that these outlier events like we had on Election Day, they do happen occasionally, and they can last for quite a while. You can see what happened with Brexit. Even after that happened, the FTSE went up and made new highs after coming off of new lows. So these markets will react, very, very. Oh, we've got a caller from. It's just a someone from Alaska had called in and just thanked us for some of the things we do here. But that's because of what TFNN and Tom O'Brien and Tommy and everybody's put together, so that we can have some really smart people here as guests, which is really, really good. But remember, these outlier events, they do occur. Sometimes they happen in the middle of the night. Sometimes they happen during the market hours. We were fortunate enough to be short the British pound at that 150 level as Brexit was happening. I had a fantastic setup to short the VIX, but it didn't work out the way that I wanted to because it came in a day too early. And the missed part of that, but there'll be other moves occurring. Now, the main thing is, folks, gold is breaking down. I'm a technical person. I don't know diddly squat about fundamentals, and frankly, I've never met anybody else that did either. So gold has broken down. We hit 1262. That sets up a profit of $100 an ounce lower. That's basically, now silver has not broken down as much, but gold looks very badly on the chart, especially after that spike at 1335. That's the way it looks. Now, maybe it's a fake out. I don't know, but it doesn't look good right now. It's broken down, and we've had a bearish tone to it ever since we hit that 1335 because it came off so badly. And when you give that much of it up, we're down $70 an ounce from the high, folks, in the 30 hours. That's not bullish action. And not only that, but the open interest is increasing in gold in the down market. That's another thing that doesn't look very good. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.